I'm Terrell Davis.
And I'm Harmon. We are two of the three partners with Davis & Harmon, LLC, the sales tax experts. DDH has been helping small and large businesses navigate the complex world of sales tax.
And along with that experience, we've built a pretty solid friendship too.
We created this podcast to share our knowledge, maybe find some money where you may have overpaid, or at least just break down the complicated stuff so that you can remain compliant.
And of course, we'll throw in a joke or two along the way.
We're glad you're able to join us for some sales tax talk, a chance to get to know us, and we promise that we'll keep it fun and lively.
Hi, my name is Terrell Davis, a partner with Davis & Harmon.
And I'm Harmon, a partner with Davis & Harmon.
Today we're going to talk about economic nexus today.
The new kid on the block. First, let's just talk about Nexus.
All right.
Nexus is representation in the state, right?
Mm-hmm.
It used to be representation in a state had to be physical.
When you say representation, what does that mean?
So representation means I'm actually in a particular state.
Mm-hmm.
And representation could be me delivering into a state my products or services, someone associated with my company that's physically in the state, which is being described as representation.
Mm-hmm.
That representation could be I deliver into a state with my own trucks.
Mm-hmm.
I'm sending salespeople into a state that are selling, trying to create business in a state.
Mm-hmm.
I'm actually sending my workers into a state to do business. Or I'm actually in that state. I have assets. Assets are equipment, buildings, just things you own that are physically in that state. That used to be Nexus.
Yeah.
Now to separate, when I said shipping in my own trucks, if you're shipping with common carrier only and nobody actually goes into a state from your company, and maybe they just Googled you and they found your company and gave you a call and said, hey, I want this, can you send it to me? Back in the old days, prior to 2019, that didn't create representation.
Yeah.
So as a business, I did not have to charge tax. Since 2019, that's changed the whole game.
When it was just physical nexus, like you mentioned, you have to have representatives or all this stuff. Well, what was unique about this one was it was a big Fortune 100 company at the time, and they had acquired another company, and this other company that they acquired were leasing office equipment. And well, obviously, one of the things you mentioned was property. Once they acquired this company that was leasing the office equipment, that meant our client had leased equipment in these states that they were leasing to customers, right?
Okay.
So now, by nature of them having property in these states via office equipment, now they have to register.
Yeah.
So now there was a mad dash to do 45 state registrations across the state on top of all the local jurisdictions. But anyway, that was way back when it was just physical nexus, way back not so many years ago.
You're actually the resident expert on this.
Okay.
So I'm going to let you give the definition. So it used to be just physical nexus, that one nexus. Now we have two. We have physical and economic. Go ahead and get that definition of economic nexus.
I guess to go into a little bit of a history, was it 2018? The case with the Wayfair case, South Dakota. There was a case essentially where the Supreme Court determined that if a company had a sufficient economic representation, and that can be a form of, they didn't necessarily define what that was. Essentially, the Supreme Court determined that if a company was making sufficient sales in a state, then the state could compel them to register to collect their tax. Right. So that's where the economic nexus thing comes about. So they didn't define what it is. So each state, we still have the issue of the rules varying by state. So each state sets their own economic nexus thresholds. In some cases, it's strictly based on a dollar amount of sales. In some cases, it's based on a either or, like a dollar amount or number of transactions.
A state may say, if you sell within a certain time period $10,000, you've reached a threshold where we want to compel you to register and start collecting tax. Or it may not be a revenue amount. It
Mhm.
may be if you sold 100 items
Mhm. Yeah.
that
Yeah.
triggers this economic nexus,
Yeah.
or it could be a combination of either or.
Yeah. Most of them set anywhere from 100,000 to as high as 500,000. 100,000 is a good, number that a lot of them sit at. Number of transaction is usually 100 to 200 transactions, either or. This thing is so new. I was doing a economic nexus study for a client in 1 month. In a few months later, did another one, and the dollar threshold was changed.
So basically, the difference is physical nexus. You have to actually be physically present
Hmm.
some sort of way, and it doesn't necessarily mean that you have to be physically present and stay there.
Hmm.
It's just you have to physically have been in within the borders of a state.
Hmm.
Economic nexus is you made a certain number of sales
Hmm.
or a certain number of revenue within the borders of a state
Yeah.
that triggers
Yeah.
your responsibility to
Yeah.
start collecting.
And I would say it's not uncommon for a client because as a result of the Supreme Court case, it's sales tax is more of a table topic discussion now.
Yeah.
And so, as companies are learning about this, they're more wondering, okay, do I have an exposure? Kind of take a look at this. But I would say 8 or 9 times out of 10, there was some physical activity that was not being considered
Right.
and evaluated. So and basically what I'm saying is they had Nexus already
Yeah.
before the economic Nexus came along. Activities of your subcontractors
Yes.
can create Nexus for you. Third parties is what I'm trying to say. So if you have a subcontractor operating on your behalf, third party salespeople operating on your behalf. So listen, so third party activities a lot of times will create Nexus for you as well, just as if you were doing it yourself.
Right. Right.
So I saw a unique one recently. I was doing a study, and I didn't agree with it, but that was the state's position. They decided that if you use an in-state drop shipper, that drop shipper creates Nexus for you. And on the surface, I knew that might be an issue, but the logic is what bothered me. That when you purchase from that drop shipper and the drop shipper delivers it to your customer on your behalf, there's a for a brief moment you own this property before it gets
Oh,
delivered to the customer. That's totally illogical to me, but that was the position. So now you own property in the state, and that creates Nexus.
talking about uh, just removing all de minimis.
Yeah,
The minimis meaning that it's too small
yeah,
to measure.
yeah,
They kind of removed
yeah,
this too
yeah,
small to measure.
yeah,
That's something different.
yeah, yeah.
In your opinion, what do you think is the reason why economic nexus even came into existence?
Essentially, states were losing money when they drafted the law. And matter of fact, predating that, a lot of states sort of drafted similar legislation or similar as South Dakota did in anticipation of this rule, the Supreme Court ruling in their favor, and it became effective. I think they wrote it to where became effective after the decision or whatever the case was. But at the end of the day, a lot of states were losing money,
Yeah.
and there had been several attempts to kind of come up with things and draft stuff to get, but this one actually made it to the Supreme Court.
Yeah.
And so, but at the end of the day, it was just so much money being generated based on internet sales. The state couldn't compel the out-of-state seller to collect, and so they had no mechanism for that, and they were just losing money. They weren't going to audit individual consumers like you or me. So
Right.
that's kind of where that came about. They'll pick it up from the few businesses that may make online purchases, but that's not where they were really losing money in reality. A lot of this was online consumer purchases that they couldn't get their hands
Exactly.
on. Yeah.
And I know some of the premise behind it was prior to economic nexus, when it was just dealing with physical nexus,
Hmm.
it was kind of the burden of collecting. It was just the technology wasn't there,
Hmm.
and so there was a burden on the business to actually comply and collect for
Hmm.
the states. Now that technology has advanced
Hmm.
and people are selling online and they're tracking all their sales, now that information is available, the state's argument was simply it's easier to do.
Mhm.
So why should we lose it? The burden, the excuse of the burden is no longer there.
Mhm.
So why should we not be able to
Mhm.
tax these sales? And
Yeah.
apparently the Supreme Court agreed with them,
Yeah. Yeah.
and
Yeah.
it created economic nexus.
That's one of those I don't know that I agree with, but it is what it is.
Yeah, yeah. Give me a little info of what you feel in terms of small businesses that sell through marketplace providers like Amazon, Wayfair. Do you think Amazon made it easier for these small businesses to keep that burden off of them because they generally deal with the taxability in the collection?
In addition to the requiring out of state sellers to collect, there's also they developed a marketplace. Um, it's for market what they call marketplace facilitators.
Yeah,
And so the states then compelled these marketplace facilitators like a Amazon or different stores have Walmart has them and all different kind of platforms, but they started writing legislation to require those guys to force collection, forcing
yeah,
the compliance on them. And so a lot of sellers have agreements with the platform that the platform will collect. And so I think that was a good thing. I think that was a fair one because a platform like that is collecting anyway.
yeah.
And so the idea of them taking on that burden for smaller sellers, that makes sense to me.
Give me a quick definition of or an example of digital goods and services.
You're talking about books and ringtones and things like that, software and SaaS and other things that are provided electronically.
So SaaS, before you move too far,
Uh-huh.
SaaS, software as a
Software as
service.
a service, yeah. So it's software that you don't necessarily download to your computer, but
Yeah,
you access it strictly online,
yeah.
non-downloadable. That's the version of software that we refer to as software as a service, is what in SaaS is short for that.
So basically, software that we used to get a CD for and have to download it on our computers.
Yeah,
Now we have access to that same software, but it don't have to be downloaded. You access it
right.
through the cloud
There's a version for that.
or
Yeah,
online,
yeah.
and those are things that would fall into
Mhm.
digital goods. Let's
Mhm.
think about uh, a book.
Mhm.
You buy a book, paperback, hardback. Now you can get it as an audio book.
Yeah,
That would be a digital good.
yeah.
Uh, they've kind of, at least here in Texas, it's kind of been grouped into amusement services.
Mhm.
So you go to a Mavs game and you purchase a ticket and they send you a ticket online.
Mhm.
Streaming services.
Mhm.
That's definitely a digital good. So, you got a subscription to Peacock
Mhm.
or Netflix, and those things are taxable
Yeah,
as an amusement service,
yeah,
but it's streamed, it's
yeah.
all digital. We don't know, and I'm saying this personally, I don't know all the physical locations that Netflix may have.
Mhm.
Uh, I'm not sure if they actually own all the equipment in which the service is being transmitted.
Mhm.
But because we know there's probably somebody in every state that's purchasing Netflix, they're making a certain amount of money.
Mhm.
They've probably eclipsed economic nexus
Yeah,
in all those states
yeah.
and actually have to
Right,
collect sales tax
right.
simply because
Mhm.
of how many
Mhm.
transactions
Mhm.
and or how much revenue they've created
Yeah.
from all these states without actually having to
Mhm.
be there.
We talked about web hosting earlier. Some states tax web development.
Yeah.
And all kind of different services that may be provided. Well, a service is not necessarily going to be taxed based on where the service is performed.
Right.
It's going to be taxed based on benefit location, right?
Yes. Yeah.
Generally speaking. And so if you have a service provider that is providing a service for the benefit of those in other states, and that service happen to be taxable in that state, if you're not really thinking consciously about economic nexus concerns, it won't register that, hey, I may have an issue here
Yeah. Yeah.
because I'm providing this service for the benefit of people sitting in these other states.
Yeah.
I may have an economic nexus concern.
Let's say background checks.
Mm-hmm.
You got a company that's providing background checks, and all that stuff is being done digitally now. They're selling it to a company in one location. That's where they're billing it to. Let's say their customer's headquarters. Headquarters here in Texas. The digital service provider is sitting in, let's say, Illinois, and their customer here in Texas is purchasing these background checks. But that customer has employees all over the nation, in other states, and the digital service provider is only allocating the revenue to Texas, where one state may come in, let's say California come in and say, well, wait a minute. This particular service you're providing, we think you should be paying tax here in California. Right. And each state has its own interpretation, so to say, of what this benefit is. Right. That kind of brings it back to getting somebody to help you that understands that this challenge even exists.
Yeah. So let's say I'm providing some service, or somehow I cross the economic nexus threshold. How are they gonna know? How are they gonna find me? I am in California. I'm selling to New York. How are they gonna find me?
That's always an interesting question because everybody believes that the state won't be able to find them. It may be harder if you're selling directly to a individual, but if you're selling to a business, they have a chance of finding you because they're auditing other businesses. Right. And when they audit those other companies and these records pop up in their audit, then they go and they look and they say, oh, this is quite a bit of money right here. I see the location on the invoice doesn't show my state. Let me go and check to see if they're registered here in my state. Yeah. And then once they find out that you're not registered, now they may set up a lead. Yeah. Let's go and do some investigation. Let's research. Let's reach out to them. That's where that I found you kind of happens. Yeah. Yeah. And it does amaze me at how many businesses don't think about how they can be found. Yeah. So it's good that we make them aware of that.
I asked that question because we had a client who there was some kind of event they had with horses and a big production, and it was actually at a vendor location. And so when they hosted this event, they happened to be, and I learned this later, but the auditor was attending this event with a state rep at the time. He wasn't the auditor at the time, but he was attending this event with his son. He made an observation, made a few notes, and lo and behold, they got an inquiry.
Sometimes people are just really good at their jobs.
Yeah. I had a auditor who we both know. I definitely have had conversation with her about when she's visiting certain establishments and how she's examining receipts and things like that. Once we had a client that they had done an audit, and I saw that there was he's retired since then, but there was the name of an audit supervisor who was in their records as him having served. I couldn't help but wonder if this guy had something to do with this audit. So the point is that auditors, they live their lives just like anybody else, and they can come across you, whether it be on the job or just living their lives. They're gonna come across you. Another common one that comes up, there's these little fairs where you have temporary vendors set up, and they'll be selling their wares, and they'll have Department of Revenues walking around, actually taking names and taking business cards, and you think you're just talking to a customer, right?
Like trade events and stuff like that.
Yeah, exactly.
You actually never know the state's strategies to go and find new vendors because, again, things are going up. The state has to pay to operate. Yeah. So they're looking for ways to continue to earn revenue. Yeah. And whether we like it or not, it is what it is. So you have to be prudent in trying to learn, what your responsibilities are.
Yep.
Uh,
That's what we're here for.
we can close it out for today and try to get everybody to come back and listen to us one more time to pick up that extra little nugget that'll help you out with your business.